Morning everyone, and welcome to today's morning report with me, Richard Perry, market analyst at Hantec Markets, for Monday the 10th of February. Risk sentiment has certainly had a rebound in the last couple of days. There was certainly a very positive reaction following on from that payrolls report on Friday, despite the fact that non-farm payrolls were a disappointing 113,000. The actual overall report was deemed to be positive, with unemployment falling and the participation rate rising. So investor sentiment picked up strongly, with stock markets on Wall Street pushing significantly higher. We had a follow through in Asia overnight as well, so that has certainly seen a very positive outlook for the European trading session, and that is going to be helped, I think, also by the announcement of very recently that the Centix investor confidence indicator for the Eurozone upped again from 10.2, I think it was, to 13.3, and that actually now brings it to the highest since April 2011. And close to that March 2011 17.1 high that we've seen there. So that continues to improve in the Eurozone. That should be beneficial to risk appetite today. Certainly our outlook on these markets are having to improve now. As these stock markets bounce back, the key indicators that we need to be looking out for this week certainly going to be this Janet Yellen's first testimony in front of Congress, the House Financial Services Committee. She has that tomorrow, and then we've got further central bank chiefs speaking. You've also got Mark Carney speaking on Wednesday with the Bank of England inflation report. That is a quarterly report that comes out, and basically the expectation is that Mark Carney will now have to revise his forward guidance that he gave, with unemployment so close to that 7% mark that he laid down in the summer. So that's likely to happen on Wednesday. But today there's not a great deal actually going on today, so there could be continuing positivity after this payrolls report, and looking towards Janet Yellen, who is a reputed a reputed dove. So she will be speaking tomorrow, and more than likely to reiterate the ultra low monetary policy that the Federal Reserve. That's going to happen tomorrow, so that's more than likely to help the markets as well. So the chart of the day that I'm looking at today is the S&P 500. Strong rebound in the last couple of days. That from Friday we saw a significant push back above that 1768 mark, which was which I think now is a pivotal line in the sand there. I think for this S&P chart, we've redrawn in an uptrend line to take account for that recent sell-off. That has now comes in and is supportive, but what we're looking at is this 1799 high. That was that was the key mark that was a reaction higher. Now, if the S&P can break back above that and hold, then we're looking certainly far more positively, and you'll start to talk about the highs again. 1768 is probably the low that needs to now stay in place, and certainly if you were to break back below 1768, that would not be all that positive, considering the rebound we've had in the last couple of days. These momentum indicators are certainly now improving. The stochastics turning higher, RSI sharply higher, and not far off a potential buy signal there on the MACD. So certainly on the medium term outlook for the S&P, much improved, and certainly if it can move back above that 1799 mark, then would be certainly re-engaging our bullish outlook on this chart. So that's the S&P, and I wish you good luck with your trading today, and I will speak to you soon.